be shorting it. I'd have been shorting it. And who's going after who for insider information? I mean, I actually think the securities industry is way behind the curve here, way behind the curve in what to do with cryptos. And I know it's new for a lot of people, and I know a lot of people are like, well, what do we, but regulations need to come down on this. This is a disaster. Um, anyway, but I look at it and I'm like, oh, that's, interesting, but wouldn't that be ironic that his appearance maybe on Saturday Night Live, marks the near term top for, the crypto market? I mean, Bitcoin
And
really,
S&Ps.
quite possibly for the S&P.
Yeah, for
You know,
the
yeah,
same
and
time.
let's talk a little bit about the S&P. Well, first of all, let's talk about Bitcoin technically. So, Bitcoin has been trading heavy, and I did blog about it about 40 minutes before that. Before the wherever the chart of the day is here, about 40 minutes before that article was posted, when Bitcoin was trading above the channel, above the channel here, before it broke down, then that headline came out. But you could tell it was trading really heavy anyway. But now that we're kind of moving lower, if you look at what I think is key support in Bitcoin is going to be this 127% extension. You guys, if you're listening to the Morning Edge every day as a Forex analytics subscriber, then you know that we're talking about the 52,000, 47,000, then 40, 44,000. This is breakout point. So that's 127% extension of this last consolidation. So that is going to be, this is where if I was a Bitcoin bull and I had like a bull bear line. Now, if you guys don't understand what a bull bear line is, let me explain that to you. If it's above this level, you're bullish. If it's below this level, you're bearish. This is what I would consider the bull bear line in Bitcoin right now. Okay. Above 43,000 is bullish, below 42, 43,000 is bearish. All right. So that's the way I'd be looking at Bitcoin currently. Now let's take a look at the dollar. So the dollar, we had this triangle pattern, false breakdown below here coming up to this week. Now you got to watch the dollar index, because if we take out this downtrend line, you see it right here, this descending trend line, that descending trend line, which would be basically today's highs, that would be a bullish reversal. Now, if you don't think that that's even possible, or you're wondering if that's even possible, I'm going to tell you guys what I had an email exchange with one of the guys that I traded with for several years at Gelos. He emailed me yesterday. He's like, "Hey Blake, what do you think about the Aussie?" And I said, I'm like, man, I gave him this opinion, and let me just explain to you. The Aussie dollar, we had been monitoring it, and let me just go ahead and take this. I'm gonna switch this out just so you guys can see my mindset, and I've got to assume a lot of folks, their mindset with the Aussie dollar over the last several weeks, right? So you're dealing with the Aussie, and the Aussie has been struggling to make to make any gains, and finally we see some dislodging of the Aussie dollar as it broke higher. Now, the reason why that was dangerous when it broke higher, because anybody who is short, like technically that, if you're more of a long-term trader and you're like, I'm just going to stay short as long as we're below the shoulder, you got stopped out. And matter of fact, this probably triggered a lot of people to get long right here above these highs. Because he emailed me, and I hadn't talked to him in a couple of weeks. They've been kind of quiet as far as currencies go, and I've been kind of quiet too, because I think volatility's been kind of in the toilet. So, you know, when he wrote me, he's like, yeah, I was really looking for an Aussie dollar break higher. And I was pretty bullish. And then all of a sudden, you know, yesterday happened, right? We saw the sell off. And I'm like, yeah, I think that caught a lot of people on the long side because you had this head and shoulder pattern, failed breakout attempt, and then it, you know, well, you know, failed breakdown attempt. Then it got, you know, everybody got bullish. And I think it squeezed out a lot of shorts and it got a lot of people long. So yesterday's move lower, I think, was a shocker to a lot of people. And you know, so in other words, that really strong CPI data and the reaction to it was shocking to a lot of people. And now that you've got a lot less people short the Aussie dollar, the positioning is more favorable for a move lower, in my opinion. So I think we've got to watch the Aussie now. And I'm short the Aussie yen from yesterday. If you're a Forex Analytics chat room trader, you know that I shorted it yesterday about 60 pips ago. But the Aussie dollar as a whole is, you know, this is where I start looking at these lows and we start breaking below that low, these previous highs. Then we test the 75.50, this like the actual previous neckline. And if you want to just forget all this and look at it as a triangle consolidation, you can do that too. The fact is if we start cracking through these supports, I think it opens the door for a test of the 200-day moving average. Hold on really quick. Let me deal with something really quick. Stelios, I'm going to hook you up right now. Just bear with me. Sorry, guys. I've got to do something. We have one of our guys is out today, and he is in Europe, and he usually does all of our recording. He does all of our YouTube streaming, and he is out today. So Stelios is out there. Hey, Stel, are you around? Or he's like scrambling around. Never mind. I'm not going to bug you now. So the Aussie dollar is, we're consolidating here in a triangle. And so I think we're consolidating in a triangle. So if we break this support, that's going to be pretty key on the way down. Sorry, guys. Yeah, I apologize for pausing like that. And there you go. So now the Kiwi also, you can see this is a little bit at risk. We've been following this ascending channel that's starting to roll over. And one last thing I want to talk about today is the dollar Canadian. So the dollar Canadian, if you didn't catch yesterday, we had an outside bullish day and a bullish hammer. Now, why is that so important? Why is that so important? Because that was the 2017 low. I was hoping the dollar Canadian would have gotten a little bit lower than where we got. We got to 120.50. So I turned around yesterday and I got long. I'm still long a piece of mine at 120.73. That's my open price. That's where I got long the dollar Canadian yesterday. Yeah, if you're Forex Analytics chat room, you already know that. But I'm long, and I really would like to actually add to this long position. I'd like to see a break above, the few day high, so probably back into this channel. So then you get what Dale likes to call the throw over, which happens in opposite too. So if you get a move outside of a channel and then back into a channel, that's called a throw over. You get it on, that's what Dale calls it. You know what I like to call it? What? Dale's throw over. I'm just kidding. Just kidding. I'm joking.
Throw under.
No, one of this analyst that I like to follow at HSBC, he calls it a slingshot trade, but whatever you want to call it, you can call it whatever you can. I mean, yeah, whatever you want to name it. It's basically it's very similar to a false breakout, false breakdown. And whenever you get false breakouts, they tend to lead to reversals. And so this would be an example of a false breakdown, or Dale's throwover, or slingshot, or Dale's ultimate throwover, 3-drive reversal. I don't know. I'm just making up names now, but I'm just saying that this is whatever you want to call it. It's basically a false break. And on top of it, you got a false breakdown longer term. So again, I already went long, but it's not a really super aggressive position. I will get more aggressive if I think that something today is happening that is really important. Do you know what that last thing I'm going to leave you guys with before I let Steve take over here?
I'm pretty sure we're about to find out.
Damn it, Steve, you ruined it all. You ruined
You
it
see?
all right. It's the S&P breakdown. I mean, I really was hoping this wouldn't happen. And I'm going to tell you guys what I told the folks on the daily roundup. If you read this chart, and by the way, if you guys aren't going to Traders Summit every day, you should, because it's a good place where you can go read Mark's analysis, Jason Sen, Boris and Kathy, and it's a nice place to have just all centralized analysis for you. Just it's easier, right? This analysis I did a couple of days ago, the S&P grinding higher. This is what I was hoping for. Okay. Now, as I've mentioned to you guys during the week ahead videos, and what I was hoping wouldn't happen is happening right now, is we reversed and we went back below 4,100. And that's great for volatility near term, because if you haven't noticed the last 24 hours or whatever, we've I'm sorry, I got sidetracked there for a second. The one thing that I think is happening is we're going to be going sideways, and that's we may have a little bit of volatility right now, but what I was hoping for is more volatility in the future, and having a move that went parabolic and then reversed would solidify the top for a much longer term period of time. So what I mean by that is, if we would have had some sort of explosive blow off top and then reversal, we would see sideways price action probably for, and then you can just figure out how long. I would think that we'd be sideways for a good year or two, just sideways. Now, why do I want that? Because you and I as traders, we benefit during up and down markets. Trending markets are a much more difficult market for traders to trade, because we as traders innately like to fade strength by weakness, and we look for divergences and correlations, and it's easier to trade a trending market. And by the way, the markets tend to trade more than most of the time. Like if you had to throw a percentage on it, I would say like 80 to 85% of the time, the markets really just trend sideways. But when you get in these grinding moves, higher or lower, and believe me, they happen lower too, it's tough to trade. And then that's what we've found over the last couple of years. Volatility really sinks, and to historic lows, and that low volatility and grinding cessation higher in the markets is tough. So when you get a move like this, what had happened yesterday, yeah, it's great. Near term, we're seeing a tick up in volatility. You look at the VIX, and the VIX has spiked higher. This is part of the conversation I had yesterday, so I'm just gonna delete this and show you what I meant by all this. Yeah, we've seen a spike up in volatility, but realistically, volatility is going to go. It's going to spike up, then down, and then up and then down, and it's, you know, going to grind back down as volatility grinds down, as stocks stabilize, you know, and we, instead of going sideways for a long period of time, we end up, you know, pulling back for a couple months in the summer, and then probably by the end of the year we'll be pushing new all-time highs again. Whoops. Shoot. Sorry, I didn't want to do that. You know, we're probably going to, damn it, I just want to grab this thing. There we go. You know, pull back for a little bit and then grind back to new all-time highs. That's fine in the near term because we'll see some volatility in the near term, but longer term, we're just going to be pushing right back at highs again. And that, to me, I'd rather not have. I'd rather have a explosive move higher, reversal, and, you know, oh, whoops. And I'd rather have a few years of consolidation. And that's what I was hoping would happen. And unfortunately, I don't think we're going to get it. I just don't think it's going to happen, which means that, hey, let's play into seasonals. It is May. You sell in May, go away. We're seeing some risk off right now. We'll probably see some further consolidation going into summer. And then once fall hits and we, you know, trade around the 3,800, then we can target all-time highs going into the fall. As long as there's no, you know, black swan events, and obviously you can't account for those. And if you sat here and just banked on black swan events all the time, you would constantly lose money. So you can't just assume that, you know, the China.
If they happened all the time, they would be called
they
black
happen.
swans.
Yeah, exactly. So anyway, you guys get what I'm saying. But I think what's key today is now you just watch the S&P. As long as we stay below that 4110, 4100, 4110 level, I think the risk is that we pull back towards, you know, 4,000, 3,500 over the course of the next couple of weeks. Anyway, we'll have some short-term spurts and volatility spikes, but, you know, nothing super exciting, I don't think. So, Steve, you have any thoughts? Anything you want to add to there?
As I was saying yesterday in the morning ads, you know, there is a good chance, especially as we saw the price action unfold, that the market is going to be affected by the CPI we saw yesterday.
Yeah,
you
didn't think that the market would care much about that, right?
No, that's not the case. You know, my thesis has been and hasn't changed that the market is mispricing things, you know, tremendously. First of all, that is why we have the reaction we had yesterday, because in my opinion, if you ask me, there should be absolutely no surprise by the numbers we got. I mean, we had all the indications there, but the market just didn't want to acknowledge it, right? So now we got the numbers, and now the market is doing another mistake in mispricing, which is they think that this changes the path forward for the Federal Reserve. I think it doesn't. Unfortunately, I wish it did. But this misconception might keep on going for, you know, several days, several weeks, and this is going to be perhaps a catalyst for a counter trend move. So yes, I do think that the S&P has likely broken down in the short-term charts, because in the long-term charts, in order for it to break down, we need to see a lot more happening, right? We also see an attempt of the dollar
Would
to rebound higher.
3,000 do it, Steve?
3,000 do it what?
Break the trend, S&P.
You know, I think that 3.2 thousand is, if we're talking medium to long term, is
to Blake's megaphone.
I mean,
line.
that's a 25% decline from the highs.
Yeah, I'm not implying that this move is going to unfold in a 25% decline, right? I mean, we need to see a lot more before that happens. My next area of support to begin with is roughly at 4,000.
Okay, so hey, just really quick, we have producer prices that are coming out today. We got CPI yesterday.
And
PPI, producer prices are coming out right now, and we have unemployment claims, which, you know, I don't really care a whole lot about unemployment claims, but unless they're outsized, and, you know, don't think that they're going to be. But let's watch the PPI numbers, since the CPI numbers did move the needle, and I think people might be looking at producer prices with a little bit more of a interest today, if you will, right? Like after the move yesterday.
PPI should always be of interest because PPI is always a leading indicator to CPI.
Yes, if the producers are
because producers will always pass on, or almost always pass on, price increases to the consumers, obviously.
Yeah, they'll eat them for so long, and then
exactly, and then they have to pass them through.
Eventually, they got to pass them through. So yeah, hold on. Let's see. We have precisely 10 minutes. Or 10 minutes, 10 seconds. So heads up for the producer prices. Here they come. Let's see. Jobless claims. Oh yeah, you can see
double the expected. Look at the US PPI year on year. I mean, I can't, and we've been having these numbers.
We're comparing to last year, which was really low prints in May and June.
No disagreement there, Stelio. No disagreement whatsoever. But it's been several months that we're getting outsized numbers, and if you combine that with a glimpse of what's happening in commodity prices, doesn't look good, does it?
Oh no, absolutely not.
Yeah, so I'm wondering if equities are going to take notice of this again today. This another day of just confirming stronger inflation data from a producer level. So and one of the last things I need to mention just before we go, and I'm sorry, I know Steve and Stelios, we'll continue this conversation on the Morning Edge in 45 minutes. If you have to be a Forex Analytics subscriber, then you'll be able to log in right here on the Face webinar where we cover the bias chart. But I want to bring up one last thing before we go. One of the we did see Bitcoin slide, and guess what? There's a lot of institutional money in cryptos now. And I think we got to be really careful because, we've seen Ethereum come off, we've seen Bitcoin come off. And, if Bitcoin really starts to move below this, below this bull bear line, as we call it, with, big divergence here, we start getting below 43,000 in Bitcoin. I think we got to watch how that affects risk. I think that's always been one of those, it's a newer asset where there's a lot of institutional money.
Speaking of which, Blake, there is to be mentioned that Bitcoin has, during the past several weeks, steadily been losing market share, having to do with its capitalization over the whole crypto market, right? Yeah. At some point, it had reached 70%. It's now down to 45. So I don't know how somebody. Yes, that's the obvious interpretation of that, but I don't know what somebody can claim is the deeper interpretation, because that is the observation clearly. The question is, what are the implications for all the cryptocurrencies with this move? Because anyhow, we'll talk about it later. Let's note it up from the interview, because it is a topic of discussion.
So I just need to mention, Dale, hey, if you guys are, you enjoy what we do here, and remember, if you're watching on YouTube, give us a thumbs up, please, appreciate it. Pepperstone Securities, they are one of our webinar sponsors. And if you live outside of the US or Canada, click here to open an account right on our sponsored page, because this way you can get Forex Analytics and be in our community, be in our chat rooms for up to 4 months. And this is an example of our chat room, and this is where I got up this morning. Where I said, "Hey guys, good morning." That was an hour and 20 minutes ago, and you can see all the chatting that goes on in our chat room. So if you guys want to join our community, we'll see you there. All right, guys. Dale, it's yours. I'll catch you guys in about 45 minutes.
Welcome back, Gary Kaltbaum. How are you?
Good morning. You got me?
You got you, Gary. You going to share your screen?
How share screen?
Yeah.
Let's see, share.
So Gary is a contributor on Fox Business. They still putting you on, Gary? You showing
Every
up
day of the week.
every day. What are you on, the Charles Payne show?
I am on. I'm on with Neil, Charles, Stuart, Varney, wherever they ask.
Okay. Great visibility for you, Gary. So I mean, let's talk about what's going on. Last time you and I were talking about, how we were entering Goofyville.
Yeah.
And things were, still going up. They continued really in the NASDAQ till 2-3 weeks ago. And the NASDAQ is leading this down just like it led the rally up from the COVID crash. Do you think this is just another standard 2 to 4% correction, or there's something more meaningful?
I'm going to guess more meaningful, because underneath the surface, it is so much worse than the indices. Can everybody see my little Twitter feed I'm showing?
Yeah, and you're showing the Fred chart.
I just want to give you a few things here. This is your Fed, where their money printing skyrocketing, and my thought process was, boy, are they going to create some damn bubbles on this? And we'll get to that in a second. And then you have this. This is the Goldman Sachs Non-Profitable Technology Index. Non-profitable. And by the way, this is scaled correctly. Then at the same time now, you've got this. This is insider buying or selling, skyrocketing insider selling. And then the big guy, in my opinion, is margin right here.
Oh, okay.
So let me explain to your ample listeners. Margin is your best friend in bull markets. Right. It is a gigantic enemy in bear markets, because the first thing that happens is margin has to come off before the real dollars are sold. And I would suggest here, what we're seeing a little bit of is this liquidation of some margin right now. And one would suggest there may be some time and price to go on this. When I say that, you can see my charts now, right?
Yep, got it. ASM.
When I came on last time and was worried about bubbles, and I'm pretty sure, I mention all the time, so I probably mentioned to you guys, the SPACs, the no-safe companies, the penny stocks skyrocketing, the 3D stocks, marijuana, solar cells. I'm in love with the electric vehicle companies that have never sold an electric vehicle. So what I mean by bubbles bursting, here's a SPAC that has gone from 31 to 7. And these were all favorites at the high. Here's one that went from 46 to 13. This is a lot that's been going on underneath the surface that's not talked about enough. 13 down to 3. Of course, we can talk about one of the outcomes. Here's BlackBerry, 28 to 8, part of the short squeeze. And by the way, to me, that occurs because of the bubbles. But something happened in the last, I'm going to say about 12 weeks ago, is I started noticing that growth names were just gagging. While the stuff names, the opening up trade, were getting all the money, they were starting to cripple all kinds of growth names underneath the surface. And we end up with these type of moves here. Twilio, 457 to 296, that was leading. FVRR, 336 to 165. And I'm just going to do a few here. Peloton. And by the way, if you know what a bull and bear market looks like, a bull market is you riding up the 50-day. A bear market is you're riding down the 50-day, and every rally into it gets sold off. So this one's kind of classic.
Yeah.
But
nice rule.
There are hundreds of them. I can go through DocuSign here now. Etsy, which was at near highs recently, which is now crumbling. ServiceNow. This is not action in a bull market. Trade Desk, they just absolutely murdered. And again, remember how enamored everybody was with the gambling stocks, the DraftKings, 74 down to 42. the Ubers and Lyfts. Take a look at what's going on with them now. The solar stocks, I'm just going to do the TAN. Take a look at what a bear market looks like in solar stocks. Remember, bull markets ride up an ascending 50-day, bear markets ride down a descending 50-day. More classic. I was worried about the asinine, and when I mean asinine, I have used this as a poster child, Snowflake. At 429 here, it had almost $100 billion market cap. And we're talking a little fundamental valuation here now. Almost $100 billion market cap with $500 million in sales and lost $500 million. Well, about 60% later, and insiders selling like maniacs at the lows, you see what's going on there. And it's not just Snow. DoorDash, you had to own it. 256 to 112. Airbnb, changing the world, 220 to 140. Lemonade, cute name, but 160. So
a little too sour for me, that lemonade.
My point is that when I do my scans every night, I'm going through 200 sectors, 1,500 to 2,000 names, every commodity, every country, and I build up the weight of the evidence. And all I know is for weeks and weeks and weeks, I've been going on TV and saying I'm a growth stock manager and I own no growth stocks. And that speaks for itself. And we can go back further. This was a leader, COUP, 377 to 232, MDB, 428 to 251. And here's a poster child to print out all your viewers. This is what a bear market looks like. You top out over time, every rally right into the 50-day as the bear market goes through. And eventually, if it bottoms, it'll bottom this way and then start the stair step up. But obviously, that hasn't started. So more and more names going by the wayside. Recently, they got Square. And they got PayPal, even though they're changing the world. They got this OKTA classic double top here if it shows up, and I can go through 1,000 names that people would be shocked how many there are. But the Dow's only off a few percent off the highs, the S&P a few percent, and that's because when the market gets defensive, it buys defensive, and that's why you had good money flows into 3M as of recent. The most low beta, mega cap, boring type stuff. And
all defensive in nature.
Right. The reason why money flows there, it's because when things go awry, it's much more liquid to get out of. So the last part of the equation, and this was the amazing part, here's your NASDAQ right here. And this was amazing to me. You were on the verge of breaking out right here.
Yeah.
Even though you had a ton of names down here. And I'm yelling and screaming to my radio people and TV. I just let you know underneath the surface, but we'll stick with the indices. And then something happened. I call it Amazon Day. Amazon gaps up on 215% earnings, 44% sales, and croaks. What that did was that gave the cue to all the other stuff that look out. So they started murdering the lower caps and the mid caps. While look what they've done to an Amazon here. But it wasn't just Amazon. Microsoft reports good numbers.
Big gap down. Yeah.
Apple reverses on their good numbers, and that's on the 200-day. Google had got gargantuan numbers. They're finally coming after that, and that's one of the best of the lot here back in the day. And then
that's a breed.
Other bigger names, Adobe, somewhat of a holy crap moment, NVIDIA. Again, we're just adding up the weight of the evidence here. Twitter, they murdered on any little bad news. That's gone. How about Tesla, the darling, down at the 200-day? And I'll just end this part with Netflix gapping it down. So all this buildup did not start in the last couple of weeks.
No.
Take time, little by little, piece by piece, inch by inch.
Takes time to turn a battleship around, Gary.
Got it. And I'm saying that so much stuff had been topping over time in growth land. And then there's the other part of the equation here, and it's redemptions. And look, this is not a rub on this woman. She's been very, very successful. But the ARK funds took in here, tens of billions of dollars after a big move. And unfortunately, she keeps buying into a lot of the, what I call stocks that are done. Buying into SPACs as they get crushed, buying into money-losing companies.
Oh, the NFTs doing the people that paid $1 million for digital art.
Right.
If they tried to resell it here, I wonder what they'd get.
Yeah. So the redemptions will end up feeding on itself also. And let me just state for the record, I do not know where it stops or where it ends. I just know you're in this bearish phase for all this stuff right now. Bounces in these big bearish phases for these names are vicious, can be fruitful if you catch them right, but usually they're fleeting and usually suck you in at the most inopportune time, like this rally into the 50-day, and then bury you soon after. So my thought process is just be careful. I don't know what's going to happen. You know, the Dow S&P types, finally they got after those in the last couple of days, and that's because that's what normally happens as you go through a process. I suspect there's probably more downside. I worry that the Fed has lost control. They've had their way for years where every time they talked easier money or did easier money, the markets, reacted well. But maybe they have lost control because you can see what's happening with inflation and interest rates. And I don't think they're predicting that inflation is transitory. I think they're on their knees now praying it's transitory. And look, they may be right, but if that's the case, that's only because we're going to go into another recession, and that's not good either. So I'm being very careful. I own no growth stocks. I sold my Goldman Sachs and JP Morgan yesterday at the highs, fortunately, only because they usually come get them all in a defensive market. And again,
what they say, Gary, that you could own the best stock in a bad market and it doesn't matter.
Right. And we also recognize it's had a big move.
Yeah.
So
are you like 100% cash, Gary?
To that point. But we'll trade around, and you're going to get moves today. I just noticed, and we always have these linchpin stocks that we follow in semiconductors, ASML. So that one finally got hit. It's up, I think, 15 or 18 today. Lam Research, a very important semi, that's up 7 or 8. But you can see, you have a lot of near-term trend changes, even in the best stuff. And I can't help, I have to show the stocks, because I've been saying for a very long time, 90 some odd % of the time, just follow the stocks and it'll tell you everything you need to know about markets. And you can just see, and right here, when it was at the 50-day, I got on my radio show and listed 25 semiconductor stocks that were already down here in advance of the stocks breaking the 50-day. And guess what? They led down. So
let me ask you this, Gary. You've been around for a while. And we have these kind of sell-offs. There used to be a flight to quality. The bonds actually led this decline. Last Friday, I was saying the most unnoticeable move was the recovery in yields after a shocking NFP number, and that the markets will recognize it sooner or later, and it was sooner. It was this week. And were you surprised that there was really nowhere to hide during this week's sell-off? Wasn't bonds, wasn't gold. It's kind of like, do you notice that it's all one market and there's not that much differentiation even between asset classes, that everything goes up together? Like blowing air into the balloon and everything comes down together, just different magnitudes.
This may sound crazy. I think some people sold off stocks and bought Dogecoin after it was up a bazillion %, thinking it's a safe haven.
We'll remember
I'm not making that up. People come up to me that don't know me. Hey, I see on Fox, I like what you do. I just bought Dogecoin yesterday. I'm going, do you know it's already up 7 billion %? Oh, yeah, but it's going higher.
Yeah.
By the way, here's the TLT, which is the 20-year index. And again,
Right.
another classic bear market in that it broke the 50-day and all the way down, except for a little bit right here, below the 50-day as it comes down, and maybe another new leg down, probably oversold near term. So maybe rates come down a little. But this is a trend in rates on the long end right now. And that doesn't help the Fed, because the Fed is if the Fed is ever forced to tighten in a market that's addicted 1,000,000% to easy money, as Stone Cold Steve Austin says, all hell gonna break loose. So that's another thing I'm watching closely. And again, just the technicals. Here's your bond market here, crumbling all the way down as the 50-day comes down. So another classic bear market. So that will have to change.
That's the main legacy market that took out the COVID crash lows, because when they came in and jawboned corporate bonds and everything during the COVID crash, bonds rallied, but since have taken out the COVID lows. Not many other markets have.
Some of the things I'm watching also right now is I got to watch some of these junk bonds. Look what happened yesterday. And this is just it's one name. Here's the thing: if the junk bonds start getting hit hard, also that can be trouble, because the market follows that a lot. So there are a lot of different things.
How about corporates, Gare? You have a look on corporates?
Oh, hell yeah. Because look, I'm of the belief, here's your investment grade.
Wow, they've been trending down for a while. They look ugly.
Look, I'm a big believer that this Fed has distorted all price and yield. I've been writing up for a couple of years that, because I used to have a great income business. I don't have an income business now because there are bonds yielding that used to yield 9%, only yielding 5%, and bonds that used to yield 5% yielding 2%. It's that distorted because they're in there buying them all up. They don't care about whether they lose money or not. They have no risk with their money because they're using conjured up money. And that's why I showed those charts first of what the Fed has done. I'm just worried they've distorted the whole freaking thing. And I'm hoping this, what I call the melt up, does not turn into a melt down, because I think we have one gargantuan one-sided trade. Just so you know, you saw a gargantuan one-sided trade on GameStop on the short side, and you saw a gargantuan one-sided trade on the long side on that hedge fund that just blew up, and both of them were leveraged up the wazoo. And I'm just worried. I showed you the margin chart. That's leverage. So I've got my eyes as wide open as possible, my ears as wide open as possible. I will adhere to whatever the market dictates to me. I will not dictate to the market. But all these things put together, it's an moment, and we'll play it as it comes. And I heard you talking about Bitcoin earlier. I think you guys were right. That's a topping process in the GBTC.
Yeah.
And if this gets taken out right here, we'll see you down here. So just a word to the wise. And I do believe it has to do with the fact that you have been cannibalized by other coins, but also it already had a big run. So just a word to the wise, be careful on some of this stuff, because when Coinbase came out, and I'm on TV saying, you buy at 430, you're taking risk.
Yeah.
I was watching people. There was no anticipation that something can go wrong with the coins. No anticipation that Coinbase came out after 6- and 7-fold moves in Bitcoin in a year, and there's other coins that are now coming out. So just words to the wise, know where something has come from. And as I say quite sarcastically all the time, if something is up 10-fold in the last 10 weeks, you may want to know there's some risk, and just so you know, look what they did here to some SPACs here. If you don't know there's risk after this move here, we really can't help you. So just know where something came from. If it looks like an Eiffel Tower, the left side of an Eiffel Tower, you better know you can be in trouble when it ends. Here's Tilray, the second Eiffel Tower Tilray's ever had. It did one, I believe, at late 17. If you don't know, this is a classic Qualcomm from 1999. You better go back and study the charts of climactic buying because that's where your most risk is. And there's just a lot of these names, my friend. So
yeah, so a lot of the blow off was in February, and then we distributed. Gary, you've chosen a lot of individual issues that have lost 30%, 40%,
80.
80. I actually think that even if there is, they could resurrect another rally in the S&Ps into month end. That 3,000 is my target in the S&Ps. And that doesn't sound as unreasonable with what you've seen with individual issues, because if they can do it, why can't the averages do it?
Yeah, well, the thought process is that under the weight of a weakening market, they eventually get the things that hold up best. And maybe we started to see that in the last couple of days. I'm uncertain. How I play this is I walk in this morning and I recognize, hey, the ice has gotten thinner. They started getting after the things that had that have been holding up best, like they hit the financials. They reversed them yesterday. The commodities, which have been strong as all heck, and we'll start watching them closely. I will tell you, a lot of this growth stuff is beyond oversold here, so I would not be surprised to get a 2-3% rally in the NASDAQ, but that would just be part of the process. So
another bear market rally.
I'd be careful. And as far as 3,000, that would be a normal bear market going down 25%. And by the way, that would be garden variety. And in case your listeners don't know, bear markets do happen every now and then. I know that's hard to fathom. We had the crash, which was more event driven, but bear markets do happen. And what they do is they flush out the
weekends
valuations of the prior bull. They work things off and they set up for another bull market is really your best friend. And the problem is the Fed has prevented it with their easy money. And that's why I worry the next real bear market's going to be like another 08 or 2000, 2003, because they just refuse to let free price discovery be free price discovery. And therein lies my ultimate worry that the markets shoot the middle finger back at these people that have played God.
You're a real fan of the Fed, Gary.
I think they're a nightmare.
Do you think we should abolish the Fed?
I think we should abolish the people at the Fed. If you can get a Volcker type in there. And the unfortunate thing, we have somebody running the Fed, and now the Treasury Secretary that used to run the Fed. They are the two most important money and market people in the world. And with all due respect, and nothing personal, this is pure business, they don't have a clue. They don't have a clue. Whenever they tell you what's going on, they're just reporting what happened. And it's like me telling you that Tampa Bay won the Super Bowl. They can't tell you what's going on later. They didn't predict this inflation spike at all. But we did because we go out. We don't have butlers buying our food and chauffeurs
Good point.
Bentleys with gas. We go out and see, holy crap, I'm at Home Depot and the guy says to me, did you see this? This was $4 9 months ago. It's now $8, a little piece of lumber.
Yeah.
So I think they're just behind the curve, and I think they'll probably end up doing something stupid. By the way, if they ease now, I think the market would crack. That's what I think they're behind what the market's saying. In the past, when they ease, the market just shoots up. That's the David Tepper trade. But I think they may have lost that. We'll see. Again, I just take things day by day. I don't let my headlights get past me. I am thrilled with myself as a growth stock manager. I've owned no growth stocks during this carnage, and I'm going to be patient, wait for them to set up for another leg to the upside, not buy into the bounces, which will be sharp, quick, make you feel good, suck you in after the bounce and bury you. And we'll just take our time and keep our capital near the high water mark.
When you're bearish, you ever take some positions to reflect that mindset, like SQQQ?
Absolutely. It's so tough to take individual names because you wake up in the morning and you don't know what's going to gap up 30.
So bearish ETFs.
Yeah, but also I showed you the roadmap of again your short selling points are here and
Yeah.
here right into the 50-day. This is classic. I have printed out 5,000 charts going back decades of charts that look exactly like this and the bond market here, that these are classic. Look how it cannot get above the 50-day this whole time. Then it tanks, finally gets above it a wee bit, but it lasts 2 days and tanking again. This is the roadmap of bear markets. It plays out all the time. And I just love when people say this stuff doesn't work, when I can show them with a picture proof on this. And it's never perfectly looking like something like this, but most often it sure does look like this. And I
Okay.
think a lot of things just may have topped out, like the Amazons and stuff, and maybe just starting the bear process. And if that's the case, Nasdaq 100 have more to go.
Okay, well, Gary, you're successful because you're a hard worker. I mean, if you're doing that many scans a day,
Oh yeah,
I found the people that are the best are the people that work the hardest, and there is no secret besides hard work and living through adversity. That's a secret, and I appreciate you coming here and sharing your views, and hope that you're able to capitalize on this. And very interesting talk about you've been around long enough to know what happens when gravity takes hold in the market. So,
I studied Bill O'Neill and Stan Weinstein, and
yeah,
I take all ego and bias out of the things I see. And the book Pitbull by Marty Schwartz once said, "All I do is look in a photo album for familiar faces each day." And that's all we try to do here. Nothing more, nothing less. We drown out all opinion because Wall Street will always be bullish in bear markets. And just put our head down and do the best we can. And when we're wrong, be wrong small and be wrong fast. And when we're right, try to ride them out as far as they can go.
Gary Kalpam, everybody. Thank you so much, my trading warrior brother. Good hunting till we talk again. Appreciate your time. Time is our most valuable currency. Thanks for spending a little bit with us today, Gary.
And good health to you, most importantly.
It is. Thank you so much. And Gary, best way for people to follow you.
GaryK.com, and I'm on Fox Business or Fox News every day. But
Okay.
GaryK.com is the website. We post a radio show there each day and with a lot of notes.
And the vitamins you take.
That too.
The high energy. Will you ship me some of these, bro? They're great. You're very high energy, and I wish I was.
Don't
Anyway,
need vitamins. I just enjoy what we do.
all right. Love your work, and it's a play. I enjoy the game too, Gary. I could tell you do. It's a pleasure speaking to you. Let's do it again if you're up to it. And
Anytime.
good hunting.
Take care.
All right. Thank you, everyone, for being with us. I hope you enjoyed Gary, and a lot of passion in there for what Gary does. And you could join the crew in 13 minutes for the morning edge. Good hunting out there. Be careful. Don't get FOMO. If you didn't plan the trade over the weekend, wait, and don't try and make your week on a Friday. We'll see everyone to wrap it. Adios. Good hunting. And oh yeah, Shabbat Shalom, Amira. And don't just count your pips, count your blessings. I do believe this hot spot in Israel, what's happening right now, and the fact that Hamas made a statement that they were thanking Iran for sending them upgraded missiles to balance out the difference in power between Israel and the Palestinians, and our view on Iran to be looking out for that. And, right when we think we were going to have a break from COVID and enjoy our summers, Biden, every president is tested early on in their term. Here you go, Joe. Let's see what you do with it. So, adios, everyone. Don't just count your pips, count your blessings. And we'll see everyone tomorrow to wrap up the week. Adios.
Webinar online.